Welcome to a very special edition of On the Tape. This episode is a collaboration of What Are We Doing Substack and our traditional On the Tape podcast. As many of you know, whenever Porter Collins and Vincent Daniel join me for the pod, we always use the phrase we uttered on the trading desk together, what are we doing, in the title. And as I have mentioned previously, last August, Porter, Vinnie, and myself launched What Are We Doing? Contrarians at the Gate on Substack, and the reception and interaction has been incredible. Along with the Substack, we created a Discord chat in the community for our subscribers where we share thoughts and ideas and interact 24/7. Porter and Vinnie are way more active than me, by the way. Well, one of our Discord channels is called Charts and Pivots, and today we wanted to welcome back the chart master himself and founder of Worth Charting, Carter Worth, for another edition of Bourbon Charts. And please stick around for some exciting news and my Super Bowl matchup prediction after our charting session. Carter, welcome back for another edition of Bourbon Charts. For those who might not be familiar with this Bourbon Charts tradition, Carter used to come see us at least once a quarter after the market closed, both at Front Point and at Seawolf, and we would engage in drinking bourbon, playing a charting game, if you will, with our portfolio. In a somewhat of a game show format, we would, without declaring a side, give Carter a ticker and have him give us his conclusions. And Carter, before we get into it, and by the way, I'm already drinking, and in your honor, this is Jefferson's for the Declaration of Independence that I know.
There you go. All right.
So that would be Jefferson's I'm drinking on.
I have some scotch here, some single malt Oban, but
Vinnie, not to be confused with Tackled by Jefferson from Fast Times at Ridgemont High. I just want to make sure. All right. So Carter, before we get into it, just remind the listeners why it's helpful to kind of incorporate charts into their investment process. And of course, why you use the 150-day chart versus the more widely used 200-day chart.
Sure. I mean, obviously controversial 30 years ago, 50 years ago, 100 years ago, but no longer controversial, the study of price versus or in addition to the study of management, business line and income statement and balance sheet. The government uses stock price as one of the inputs for their leading indicator index. And long ago, it was figured out by those who've gone before us, Jesse Livermore, among others, that actually there's wisdom in price, right? And that the price moves more often than not before the fundamentals, the news comes out. And so we started as a fundamental analyst. I was covering steel companies, imagine this, all things. And then oil and gas, I moved into this area. The original chartists were sort of laughed at, with their drawings, their cups and handles and heads and shoulders and all this, but it's really about one thing. It's the study of unusual activity. Volume is the key thing of all. And where there's unusual activity, there's also typically unusual price movements. And so it's that where there's smoke, there's fire. Stocks that go down on very heavy volume, that drop in gap, there's no news, typically something's coming, and vice versa on the way up. And so I've spent my life, 34 years now, 59, just doing one thing, which is after those first 3 years of fundamentals, only looking at price. And it's worked out.
I think more than ever, these price movements have portended what was going to happen. So I don't know what's going on in trading in the markets, but we ought to see it more than ever. So you were last on with us in early April, and that was just days ahead of the formal tariff announcements, or as Porter loved to coin, Liberation Day or whatever. And while the market was already getting hit, your charts were telling you that the S&P 500 was going to drop to 5,000, which it went just below that at the moment, quickly found its footing. Ironically, we are now potentially just days away from a Supreme Court ruling, these tariffs unlawful, and the S&P is now hovering just under 7,000. So Porter, Vinnie, and myself reached out to our Substack community and had them submit ticker requests, and we'll try to get as many of them as we can. But let's kind of start with the bigger macro picture. So let's bring you back in here. And guys, I don't know where you want to start, but Porter, given one of the macro charts we want to look at, I assume,
Let's start with the big boys. Let's start with the S&P.
Momentum and relative strength are the most successful factors of all the factors that have ever been tested. And we try to look for things that are in good uptrends or good downtrends until, they are transitioning from a bullish to a bearish trend, bullish to bearish reversal, or bearish to bullish. The S&P, and we can pull up the chart here together. I've got it on my screen. There's nothing wrong with this chart. It's just that you've gone a certain amount of time and a certain amount of duration without a check back to the 150-day moving average. And that's the question. When is the next proper instance where you come back to trend? And this is one of the longer stretches on record without a give back more than sort of 3-4%. And basically, I think you want to be hedging, if you will. And there are signs in the market that are negative. Let me show you a piece that just went out on Monday that speaks to this. This is the leading sector. We know that tech is 32% weight, but if you put back things like Google and Netflix and Meta, it's really closer to 50. And software is the leading area within technology. It's, of course, got Microsoft and other big names. And software has been flagging. This is an issue, right? Because semis are highly cyclical, and semis relative performance peaked in 1994. And we can look at those charts. It's all just a recovery move, having been underperforming really for decades. But it's software which has led the market always and forever. And if you did a long-term chart of this, the orange line would be way ahead of both lines. But it's this divergence that's an issue. To think on a 3-year basis, the semis have doubled the performance of software. One could say that's because, semis are more in every refrigerator and every phone and every watch and so forth. This is all true. That being said, they are no different than oil services stocks in the energy complex. They're the beta trade, they're the cyclical trade, and they're the ones that get overdone and typically also can get. And you see, of course, look at the green line. It overshoots the entire tech sector way up. It undershoots on the way down. It's the beta trade. But the more important thing, I think, is the weakness in semis. And this speaks to one question for the market in 2026. And let me just go through this IGV quickly. You can see however you want to draw lines, but watch these names. Look at this. These aren't an uptrends at all. This isn't an uptrend at all. This is an Autodesk, Microsoft, Guidewire. These are all big 20, 30, 40, $50 billion companies. I think there's a real message here. And what's kept the market going is that you've got things that are quite stretched, Google and Apple within tech. I think on Friday, and let me just make this point, on Friday, the first day of the second trading day of the year, but the first day of this year, calendar-wise, the semis were 4.4%, and the software complex was down 2.2, almost 700 basis points of spread between the two. That's a negative divergence which needs to be watched. But my hunch is you reduce exposure to the equity market, and that 2026 will not be as robust as the prior 2 years.
And I assume that the Qs tell the same story if you're looking at the NASDAQ, considering the tech names you just brought up with that.
Yeah, the Qs. So the Qs have a bit of divergence as well. Let's go back and forth here. Qs, the relative performance and absolute performance peaks on the 29th.
Yeah, not as good.
SPY. QQQ, SPY. And RSP has been even better, right? So it's because the biggest names, one can say, but isn't that good? The equal weight, that's what people always cite, the equal weight. Joe, the equal weight since inception has outperformed the actual. So at the beginning of data, going back to 1990, the S&P 500 equal weight index has outperformed the market cap or actual weight index.
We were pointing out today that Apple looks like it's starting to roll over a bit. Tesla's rolled over a bit today.
Yep, agreed. I mean, that's exactly. And so one could say, how long can it hold up with, big names, this, even Meta, right? Or Netflix, which aren't in software. There's how long can it hold up? There's always something coming to the fore. It's like a perpetual motion machine. All of a sudden, Goldman's getting very steep, right? And Morgan Stanley. But I mean, you guys can speak to this as well. Anyone is really, having dedicated a great part of your lives to financials. Think about DLJ selling itself for 3.5 times book in March of 2000. JP Morgan. What's JP Morgan trading at now?
3.5 times book or something like that.
3.5 times. Yep.
Yeah.
I was just asking that question this morning, Carter, to Porter and Vinny. I said, when did we just go completely to earnings on these banks, which is great, but when did we kind of detach from book value and ROEs and those things? And it's great. No one asks those questions in the bull market, but just pointing out. So Carter, you went over a few of the names which are actually on the list for some of our subscribers. And you mentioned, I assume, the Tesla, how it looks like to you, the Netflix, how it looks like to you, the NVIDIA. Can you just go over some big guys, just form an opinion on that?
There's one that it's a little bit different too. Amazon looks like it's actually doing the opposite of the other big boys.
And Amazon is better, right? For sure. And a good day today. I mean, that you press that, right? I mean, to my eye. So
you press, Carter, when you say you press long or you press short?
Press long. You press long.
You had a 6 on the craps table. He pays you 30 and you press it.
You get
got
bigger
it.
here.
Okay.
So you got things that are very bullish. Let's talk about what they are. For starters, you got this heavy volume up thrust and gap, right, on 31 October. Has to be new, something positive. It checks back on light volume, and then you get another heavy volume up thrust and gap on the 18th of December, and then you get very heavy aggressive move today. I mean, that's what a conventional buy juncture, a level. It's toyed with the prospects of breaking out. I mean, I'd say 280, 285.
Okay.
Seems
Strong
right.
edge.
Netflix, on the other hand, this is not Netflix, Tesla, sorry, Tesla.
That looks.
We did a poll. You'd like this. We sent out a poll right here just 2 weeks ago. Scenario A, it breaks out. Scenario B, it backs away. And 70% of the constituents responding, people in the poll said breakout. And of
Well,
course,
sorry, 70% of people.
of the people responding to the poll said breakout. Maybe I can just 2 seconds. I'll try to find it while we're looking at
The
the chart.
breakout. So
But that it would break out. And the other choice was that it would check back to trend. Watch this trend line. Perfect. Trend line. 30% picked that. That's exactly what it's doing. It's doing the check back. I think at 400, I'd be willing to nibble. But no trade here other than to, if you're long, to reduce, sell calls, do something.
somehow I think 420 will be a level that it hangs out at, but call me
Mm.
crazy. Call me crazy on that.
The other one, I guess, of the big boys is that Nvidia is sort of in a range. I guess it's kind of a pair of twos. I would say maybe
Yeah.
by the upside kind of looks okay.
You can't, Porter. We can't tell him things
can't
that we
lead the
feel
witness.
before.
You're pulling the dam right now.
You change the samples. You can't do that. Sorry.
Let the man speak.
Yeah.
I mean, here's what it is. We know that it is, like everything, a huge move off its tariff kerfuffle. That's all you can call it, it turns out, right? It's a little dust up that didn't have anything to do with anything, I guess. But a big move off its tariff lows, a nice check back to the 150-day, and then day to day, relative performance poor. S&P is close to making new highs. Equal weight is making new highs, IWM. And so maybe a little better than that. I would say pair of sixes. How about that?
Okay.
Yeah.
Let's go around the horn to things that are working right now. The materials sector is just absolutely ripping. Every single fantastic finishes, Alcoa, gold miners,
The chemicals, even that, right? I mean, not all of them, but some, very, and obviously a very small sector within the, here, watch this, SPX index go, members.
Calvin Froge.
And then, what is it, about a little less than 3%. Let me see if I give you the sectors. So we've got materials down here at, think of that, 1.89%.
Yeah.
Which is incredible, right? So what does that equal to? Let's find a stock for fun. SPY. And we know, therefore, the entire materials sector is equal to, what did I say? 1 point what?
1.89.
1.89 up.
All right. So it's like a Danaher or Capital One. Incredible. Wow. And think about all the jobs and all the revenues. And so is that cheap? One could say. The interesting thing about that is the sectors, they get to 30% and they almost never, this is the first time in history. Oil, 80-81, the oil peak was 30%. Financials have been 30%. Tech, of course, has been 30%. The big healthcare names at one point when Merck, Pfizer were top 10 and so forth. We're way past that, right? And maybe the economy changes and the makeup and, of it and so forth, it deserves to be here. But it is telling that this sector is now underperforming. And that's the big question mark for the year ahead, because no matter if this were to really roll over, this stuff is just too small. Meaning the water, the amount of volume of water that were to come out of all of this, these sponges down here would be saturated. Real estate can't soak that up. Materials can't soak that up. Utility, you know what I'm saying?
Yep.
Yeah.
So let's go through some of these materials names then. I mean, we were looking at HUN Huntsman. I mean, that was going to be.
All right. Well, there's not fun. I mean, that's nascent, right? That's early stage bearish to bullish reversal. This would be the first time in now a 3-year chart where the 100-day, while not quite flat, is on the cusp of flattening.
I just got to interrupt here. I got to interrupt. This is the exact time we'd be in our office right now where Steve would be with us and Porter had done work on Huntsman. And then he had his model ready. It already looked good. And literally, if you did something like that, Carter, at that moment, Steve would turn to me and goes, I'm like, Steve, the market's closed. He goes, I don't care. Put an order in Porter, what would he do on something like that?
Oh,
Like
yeah.
that's
Porter knew he was leading the witness.
Yes.
Like we've studied Carter enough to know where we think he's going to be,
Right.
and what we wanted to hear. And Steve, every once in a while, needed outside appraisal. So, like, that was a loading that we all wanted to make sure that we made this bigger. Thank you, Carter.
So if we're fine, let's do this one. We would do that. I mean, sometimes here, let me get rid of this. But look how we'll do some drawings here for fun, right? And I don't know why this is log. Change that, and let's do it as standard. And this is what. Look, this is very. Hold on. There we go. Now we'll do a standard 3-year chart. Okay, so I'm going to do something that's subjective. Obviously, the judgment is subjective, right? I'm saying I like it. It has the elements of a turn. But this is important. You have a well-defined trend line, and you have moved above it. You also have, let's get a nice color here, ready? And you have this. Now, these are judgment. These are conclusions that one could say, well, I don't agree with that, what you're about to do, but that's worth, that's a little bit of a bad, here we go, spend 2 seconds. Now watch this. What I see is that, and of course, you know what I'm about to do, and that,
Oh, yeah.
and then
You're like Bob Ross right now.
yeah, okay. So what have I done? I'm trying to annotate, that's what those are, annotations, what my eye sees, but what it's trying to say, let's put the green arrow in, is this, that if you're in a downtrend or uptrend, it's sequencing by definition means that it is a lower high, lower high, lower high, lower high, and then lower low, lower low, lower low, but it's made not a lower low, it's about to make, so it's a reversal. Now, whether you use the 150 moving average to depict that, or whether you draw like that, that's how things change, right? You're in the cusp of a bearish to bullish reversal, and the price volume correlation back to the volume is very encouraging. So watch this. All of a sudden, when down on heavy volume, down on heavy volume, down on heavy volume, down on heavy volume, and then all of a sudden, heavy volume up thrust, and then again, heavy volume up thrust, and then again, look at that day right there, December 10th, heavy volume up thrust. The price volume correlation is turning from down on heavy volume to up on heavy volume. The smoothing mechanism is flattening, 100-day. You have the elements of a reversal, which people in the 1860s and 1810s were talking about, heads and shoulders. They were desperate. No one believed them. They had no computers. And people said, oh, so they named things that people could see with their eye. Turned out it was all right. All of it was accurate and right. This is a beauty. I would be large long.
wow.
All right.
Large
Long is a new one. So that's a good. And the other, I would imagine, Porter, some of the other names in the sector are going to marry up with that.
Yeah, like I think CC is one that's maybe not quite as pretty, but
right, a little bit, or was bottoming, right, and then altered. But I would say benefit of the doubt from the low, higher low, higher low, higher low, and you're getting in truckers. I don't know if you saw the truckers the last couple of days, of course, and so that it's all Alcoa has been up and really come to life. That's more of a, as you said,
a fantastic finish if I've ever seen one.
Yeah.
That's no Jets finish right there.
No.
By the way, and they took Circuit City's symbol and it still worked, which is quite something. That's a name for people that half the people are listening probably have no idea what that is, but for sure. Or you want to move it around a little bit, Vinny? I know you want to take us into your metals world here a little bit, and maybe
I would love his perspective on gold, silver, and we could drill down deeper on certain tickers,
miners. Yeah.
This is the gold silver ratio. All right. Now this is simply when you divide one thing by another, the denominator, you're looking at the relative performance of the numerator. And so you can get this on Bloomberg, you get it on any chart service, but this is an all data chart of the gold silver ratio going back to data that begins in 1970. And you see these extreme oversold. This is a function of not so much gold dropping, right, but silver surging. And of course, so the gold silver ratio plunged. In April, it was you could buy 107 ounces of silver with 1 ounce of gold, and now you buy 57 ounces. That's a function of silver being having shot the moon. So if you look at this chart, which is simply the gold silver ratio with 150 moving average on the weekly, and these numbers A, B, C, D, E, and so forth. This most recent reading, which was whatever it was, 7 days ago, and you look at this weekly RSI, when we have been this sold, and there are the lines. You see these? I've tried to annotate this with these lines. This extreme. This is what happened. So I've got all these dates, right? Each one of these, A, B, C, D. So this is what happened 3 months later. And the current one was on December 26th, when the ratio was sort of 35 to 40%. 3-month performance of gold, 3-month performance of silver, but the most important thing is the differential. Gold outperforms or silver underperforms every single time. And so silver was down 6 months. This is the different, right? This is the difference, differential between the two. Silver was down every single time. 9 months, silver was down. Now, it outperformed in this instance. Gold was down 10, but gold's the bet here. Silver is the beta trade, it's the cyclical one, it's the speculative one, it's the small one. But this data is what it is. And so we could, look, that's 24 months. This silver, is extreme. I would just say that's reduce your exposure.
Gotcha.
We can look at the chart, but what are you guys thinking? Do you think it's going to be?
I think Vinny wants to focus probably more on the. I mean, they express it much more.
Danny, I'll give it. We're leaning. Our exposures are more in the large gold miners. So if
Gold
we
miners, sure.
get a perspective on AEM, AGI, and some of the others right now.
Right. So AEM is the big one, right? That's the biggest of all. Let's look at that. But I would say that unless that data is somehow going to be wrong for the first time in history, the spread would suggest that not only it's right to be long gold versus silver, but that silver is down on an absolute basis. All right, what do we know? There are two ways you can work off excess. Once you get too far above trend, using the smoothing max 150 moving average for trend line, you can resolve by checking back to it or going sideways, and it catches up to price, right? Price down trend or sideways. So this is not as extended as it was simply because
Correct.
now I look at winter, look extended at all, right? And so it's gone sideways for 1, 2, 3 months. I would say this goes higher. I would, if you can ACAT an account. And so if you could wire a stock, you can't do that, into someone else's account or transfer. I would sell the 200 calls and stay fully long.
Gotcha. And AGI?
AGI?
Yeah.
AGI. All right. And again, about sequencing. So a big move and a check back, a big move and a check back, a big move and a check back. Again, the 100 moving average is simply a trend line that we use. You could draw it, right? Drawing it's fine too, but it's a lot of work. And so is there anything wrong with the chart? No. The question is it a little bit, are we at risk of the next check back? That's the question. Yep. And if that's the case, what to do? The one thing that's quite encouraging is you just had this on December 19th. That's the 22nd, actually. Is that the 22nd? Let's see what this one. That's the 19th. So the heavy volume is on a down day. I would say either trim a little bit or fully long as in case of AEM and sell calls.
All right, let's do one more gold name, CDE.
Where are you?
Yeah, Coeur They still call it that, Coeur d'Alene?
They changed the name, but yeah,
changed the name. Well, classically, sort of vulnerable extended, a check back. Now, that serves its purpose, right? Now you can say, well, it didn't go over the 150, but it did the job, right? You shook out, you people dumped it, and it's one heck of a thing, right? To think that it drops from.
Don't leave the witness and tell him why, Porter. He has to figure that out.
62 to whatever this is, but that counts. And so it's been reset. A lot of people coughed it up. And if I pull this back, of course, we know it's a shocker. It makes you want to say, well, now obviously there's dilution. This is never going to 250 again and all that stuff. But I mean, there's no reason this can't be, 25 and so forth and so on. 30, 35.
Yep. Guys, you want to move into energy a little bit here? Maybe start with oil, natural gas, and maybe some of the names you guys involved in.
Yeah. So oil, let's talk about oil here.
Yeah.
CL1.
Tough.
Oil's a big old, yeah. Oil's a big old nothing. I mean, here, let's see. All right, here's the chart. It's what do you do with that? Here's 5 years, and let's do a max to get rid of. I'll get rid of this thing on the bottom. Who cares about the open interest for now? Get rid of that. So if I go back, I think the data goes to 1972 or 3. Let's see what we got on here. All right, coming up when the thing populates. So that's the spike. Wall Street predicts 250 a barrel in the invasion in Ukraine. Of course, it's the exact opposite. It goes, gives it all back. And this should come to life here soon. Okay. So, and forgetting the negative number that briefly, this is sort of a baseline right here. And the question is, could oil, there's a famous magazine cover indicator. Do you know, if you go to the Fidelity chart room, there's a big a football field right here. Time Magazine or Business Week has a barrel of oil. I remember distinctly. It's got a teardrop, but it's brown, right? It's crying. The barrel of oil is crying. Oil going to $5 a barrel. Of course, it was absolute low. What does a journalist at Business Week or Time know about anything? Magazine cover. And here, energy. This is just look what that data is. That's literally the Lehman's gone, Bear Stearns is gone. We're getting into the, and that's just a fear trade. So right now, I would say this is a pair of twos. But here is the interesting thing. I think that really says that oil is just not as important. It used to be that you could see if I can get this. This will be worthwhile. Oil as a cost, as a percentage of GDP, is running at what, 4, maybe 5%. It used to be 7, 8, and 10. We don't, we're more efficient. So if I were to do this chart, which is oil adjusted for inflation, it's going to show you that it hasn't gone anywhere in 50 years, right?
Yeah.
Oil right now, adjusted for inflation, is at $17 a barrel. Put in 1960 again. It seems to be taking a while to populate, but it's not. Think about how much data point it's crunching. So here is oil adjusted for inflation. We are exact same level we were 50 years ago. I can go back further, and it's a non-event.
And it's been that even proves it's been such a tailwind for the consumer.
Yeah,
100%.
Yeah. So 17 versus in 1990. I don't know why this is going to 1990, but I have it back to 7.
And for those of you that are just listening on Spotify and Apple, I would point you to YouTube for this particular episode to kind of see the magician, work here on the chart.
No visuals, not much to offer, right?
So ExxonMobil, I guess, has been the best of the oil names. It's feeling like it's doing all right. Danny's been on that one. It's been a great trade.
Yeah.
Speaking of information leaking ahead of something and then selling on the news, yeah, it's a good one. But yes, I think,
yeah, that's just fine. I mean, oil. Let me show you this is, I guess the way to think about it is this: energy is the single worst, bar none, performer into COVID.
Yep.
Because there are no cars, no planes, literally, and it's the number one performing sector out. And so over the 18-month period, then of course it's done nothing. But the question is this: is this setup? Say this was a 1-year chart of a stock, or it was a 50-year chart of a commodity or whatever, and you didn't know and it said Exxon. How is this resolved? And one can say, what is this? This is something that puts in a double bottom, and that has a period of impressive strength going from 30 to 120. You don't know what it is, and then consolidates for 3 years between 100 and 120. How is that resolved? And if you were to take 100 charts like this, 1940, 1980, 2080, I will be dead. I was born in 1966. How are they resolved?
Usually higher.
That's right. Strength, rest, resumption of strength.
card sharks. I told you the game.
Good.
Yeah.
All right, so let's flip through. Let's just around a couple more. Let's just look at a couple coal.
You want to do
charts.
energy names?
We'll do a couple coal charts. Take a look at CNR and AMR. I think are the two. One thermal, one met.
Porter, show us your
Bourbon.
Show us your bourbon, Porter.
Oh, I got some AMR bourbon, which
Must taste great.
yeah.
It must be good. Yeah.
Coal mine.
Good metallurgical
Coal mine,
coal.
right? The coal.
Andy
coal.
Edison, one of the best CEOs on planet Earth.
Yes,
So
he's awesome.
Let me just do one thing on energy. Let me just share this. This is self-survey, of course, but price leads facts. Look at this. This is July, 6 months ago. Let me show you something. We're talking about bearish to bullish reversals and materials. Left for dead energy. stocks.
Tidewater.
Look at this.
Seawolf
Tidewater, PVC.
That's one
Look
of
at
our
this.
names.
Every
Wait,
one
are
of
you
them.
saying, just so for people out there, you're saying buy?
No, so I'm saying that they were bottoming before any of the big moves occurred. There's wisdom in price, right? So 6 months ago, the left for dead, the worst performing energy stocks, Exxon's doing nothing. This bearish to bullish, bearish to bullish, bearish to bullish, early stage, all on the cusp. What's been the best performing area within energy? Oil services.
Oh, I
That's the beta trade. And I think there's plenty more to go. So if you were to look at something like a Seadrill then, and then look at it now, just to make a point, watch, SDRL, the bearish to bullish reversals, right? The APAs, they're all developing. This was a nascent part. Now they're off through the roof. This is what's
why
left.
don't you show Seawolf favorite rig?
Yeah, I was going to say, give me
All
some
right,
rig.
here we go.
Oh, yeah.
Look at that. That's a
You like
beauty.
it?
I love it.
Beauty.
I mean, that's a textbook. Now, here's the list, master list of buys. There's your name, rig, at 293. You know, that's 433. And I think this got more to go. I like this stuff a lot.
How do you like
feel like
Tidewater
the-
now?
TD, what is it? TD,
TDW. You were showing it.
DW.
TW. Okay, so Tidewater has lagged, and yet because of this price volume correlation, the upthrust and gap, the check back, the heavy volume upthrust and gap again, I think this catches up. I'd do it.
Okay.
You like that, Vinny?
Yeah, I got one or two more. Some of the natty names. EXE and Ontario Resources, AR.
Well, not as interesting here and now. This was a stronger stock that then of late is stalled, doing the opposite. This must be something to do with the opposite of what drilling is. What was the other one?
AR.
And there too. I guess I would say I'd rather do other things than these. These are not acting well.
Gotcha.
Okay, so let's go to the coal. CNR and AMR.
There you go. Proper bearish to bullish. You get the
Yeah.
overshoot, you get the check back. I'd press that long. What's the other one?
AMR.
AMR. Oh, that's
Oh,
beauty. Oh,
beauty.
can't, you know, and that's the think about it's people say, but I want to buy it down here before you're going to like it at 150. We bought it at 100. I've had that in meetings after meetings all my life, right? Big, it could be 15 guys, 2 guys in a room. They're running 8 billion. They're running 40. It doesn't matter. And they say, well, Carter, you like this one here, right? At 100. We bought it at 100. And I always say, I go, hold on, Ralph, we've known each other about 19 years. That's true. I said, you bought it at 100? How much did you buy up here at 160? Oh, well, we bought a little bit. How much did you buy up here at 200? Oh, well, that's true. I bought some. He's just telling you about his low print. The point is that you want to be on the other side of the turn. You want calling a bottom and just say, today's the day. There's no technique known there. Some people are so big, they have to be early, to be fair. They end up being a page one holder. They own 30% of the float. They can't be slow, but you want it to turn. You want to show characteristics that are the opposite. Instead of down on heavy volume, down on heavy volume, down. Now it's up on heavy, up on heavy, up on heavy. 150 turns. And notice, guess what it is? It's a double bottom to the penny.
Oh, yeah.
The sequence changes.
Penny.
Lower low, lower low, lower low.
The penny.
Lower, yep.
The
Beautiful.
penny.
Yeah.
Carter, is it safe to say, back to the chemicals for a second? You don't have to go back to them, but what you just described on some of these names 6 months ago is where chemicals might be right now.
So it's a mixed bag. Like DD is through the roof, but Dow, right, is exactly that. That's like the first one.
Oh, look at Dow.
I mean,
Jesus.
yeah.
Fuck.
Whoa.
Yeah, that's a beauty. I mean, right? This is a little early, but I might jump the gun. There's GLK.
Seawolf name right there.
Yep.
Yep.
That's on the list.
That was
LYB,
in
yeah.
What's Great Lake? I can't remember. They gone? Are they gone? Great. What are the other ones? LYB.
Yeah.
Oh,
Yeah, you did that.
So, Carl, let's rotate a little bit to some China names. China's kind of interesting. We got the FXI, the CQQQ,
Sure.
KWeb.
I would say large long here. This is a nice, this too, again, it's the double
Oh, yeah.
bottom. It's key. It doesn't make the new low. That tells you, hey, the sequence has changed. We're not in perspectively not in a downtrend anymore. Those lows in FXI, of course, were prior lows as well.
Double bottom right there to the
I didn't
penny.
realize how good. I actually didn't realize how good that chart looked. When you were on in April, Carter, we mentioned that Porter and Vinny were buying the stuff in January when everyone hated it. But yeah.
No, that's great. And I would say more like the KWB is another thing, right? That's the not quite the same, but the same general.
I think the CQQQ looks a little bit better than that.
No, you can't. No, you can't say that.
Hold on.
It does.
I was right. I just was leading the witness.
Yeah, but it does, right? The K-Web is dropped in here, and this has got all the elements. Look at that. I mean, that price targets are a mercurial thing, right?
What I'd say 100 in that one, probably.
Just to show you. So we look at Alcoa, right? You got how is this possible? How do you say this, guys? Let's go with Christopher. Christopher thinks he's worth 55. He's doing hard work. He's a good man, surely. And
by the way, for those who can't see, these are research analysts, which I'll probably have.
Yeah, these are analysts. I mean,
go ahead.
what in the hell? They have the same income statement, same balance sheet. They can study all the smelting and the number of goddamn cubic, whatever it is.
B. Riley analyst. I mean,
Right. Right. But even here, JP Morgan, you guys got William thinks worth 45, and Tamina thinks worth 58. How do you square that off? You can't. There's nothing there, right? The analysts' price targets are.
Well, the only thing there is potential.
We can do.
Business, Carter.
You can project here. I mean, this would project. Just a simple thing is that you had a check back. You should recoup the losses associated with this sell-off, make a new high, and then an increment. So that increment would imply somewhere around 68, 67. And that point, it'd be very steep, and you'd be due for your next check back.
While we're on China, how does BABA look? I mean, it's a component. It's within them, but just curious on a single stock.
Look at that. That's finger licking good, right? So
Finger
nice
looking good.
Finger licking.
up on heavy, down on light, right to the penny, large long. That's
I might be
Wow.
buying tomorrow.
Guys, can I take us back before I get into
You
the
can do whatever you want, Danny. It's your podcast.
And it's all you.
Don't be a dick. All right, U.S. dollar, because it's such a big component for especially gold and everything. Everything's kind of broken off all type of correlations. I'm just curious on the Dixie, what we're looking at here.
Let's go XY. Trying to bottom. You'll see it when it comes up. So I'd say more of a pair of twos. I would need more strength to sort of make the case, but it has the first part. There's something of a double bottom, and
Okay.
if for this again, it's always just cross out. You didn't know what it was. You know, it's a sushi company or software or soda. I'm a buyer at 100 and making a play that I could try to scalp this from 100, to 103. But right here now, maybe small long.
So
All right.
now
Hold
we're doing
on.
emerging markets and stuff. Let's try Brazil. What does EWZ look like? Obviously, Trump's favorite region these days, South America.
AWZ. Fine. Sort of a stay long, be long has made the turn, and there's every indication that it works higher. I mean, here's a 5-year chart. It's just like, who cares, right? So to speak. It hasn't won, it hasn't lost. But in terms of the here and now, a vehicle to commit capital to and try to profit from, here and now, every long.
Can you check Petrobras while you're down there?
Yeah.
And for our growth guys after that, Mercado Libre.
All right.
Mercado Libre.
PBR.
Little past blue ribbon.
Cool.
Yeah, that's. I guess I wouldn't do that. I would wait. I'd much rather pay higher, right? If this is going to turn, it's just not doing.
But this is when Porter says, "But the dividend."
I was waiting for, but the dividend.
Yeah, I mean, sometimes look, some of these REITs, you're like, yeah, but there's 40%. Okay, that's different. 40% dividend. What was the other one you said? It was
MELI.
Melly.
Yeah.
Yeah, that's not great. I mean, that's what a bullish to bearish reversal is. A strong stock, but then now the 100th day is turned over for the first time. You've rallied back to the kill zone, so to speak. I guess I'd use this little rally to exit.
All right. Can we get 10-year yields? Because if I don't get that out of the way, which we know when it rears its head, it's the most important thing in the market. So
Danny wants to go to the more bearish segment.
no, I'm just saying, I don't know what it's going to be. He may say a pair of twos.
It is a pair of twos, right? I mean, it's
Okay.
Nirvana. It's what's kept. I mean,
I'll drink to that.
Price of long 10-year money is fixed at 4%, which is remarkable in and of itself. So, I don't see anything changing. Interestingly, yeah.
Little Billy Joel.
Yeah.
What about as long as we're on the Danny train here, let's do a little DraftKings, Donkey Kong, DKNG, and then Genius, GENI.
GENI. Okay.
And then Donkey Kong. And by the way, by the time we get to the speed round, I'll be 3 drinks in. So you might have to fully take over at that point. So
that doesn't look great.
No,
Porter, shut up. So annoying.
But it isn't, right? Something's gone wrong. It was great. But
wait, what went wrong? Wait, which stock was that? Genius.
So it broke trend hard, and its relative performance is poor. So if I were to put this in and put a relative performance line, which will give you relative strength, and I'm going to change this to the market. Take a look. Ready? Okay. So that pink line is simply the relative performance to the S&P. And it makes this new high here, but really doesn't make a meaningful relative high.
No, I know why, but that's fine. Yeah.
I would just say pair of twos.
So Vegas stock, hard 4, pair of twos. All right. DKNG. Get that one out of the way. And then I can't wait to get your opinion on cannabis.
DKNG. It's also a pair of twos.
So
if I had to bet that, I'd be short.
Yeah.
You had to pick short.
I had to pick a direction, I'd be short.
I concur. You guys want to do your cannabis stock there?
Well, it just was only one cannabis name that we care about. GLASF.
QU-5.
Say
that one again. It's G what?
five letter ticker.
5 letters.
GLASF. Glass House.
Ooh. Oh my.
What's the purple thing?
So this is schizophrenia, right? Let's get rid of the purple.
No
line.
question, it's schizophrenia.
I mean, to be, it gaps up, it gaps down, it gaps up, it gaps down. I mean, literally, fortunes are made and lost. People are hanging themselves, jumping on bridges. Other people are buying yachts. I mean, this is. But how does it get resolved? That's my hunch is up. This is very. This heavy, aggressive buy.
Wow,
nice flagging. I would say.
I would not have had that.
Suck it.
I would say 12, 13 higher.
Okay. You guys want to go speed round here? What other?
Let's just little consumer names. People asking for Nike, Lululemon.
Yep, that was going to be part of the speed round, but let's
Target and Walmart. Yeah.
Target,
Walmart.
Okay, and I'm going to pull up one deck here.
I still can't believe the market's closed in the chemical stocks. I can't trade them right now because that was. I don't think people understand the history with Card or something like that, where the fundamentals are actually matching. The
fundamentals haven't turned yet.
But they're going to turn
ahead of the fundamentals right here.
What's that?
The charts are ahead of the fundamentals.
That's what I'm saying. It's telling you. Anyway, sorry, Carter.
No, I was just going to say, what it was so 24-hour trading, is that really coming? I mean, what is the?
No, I mean, I'm saying like if the markets were open.
No, I know, I get it, but is that ultimately coming where you can just?
God, I hope not. I hope not. That means it probably is.
Prediction markets are going to be trading stocks soon that it's going to be 24/7. So we'll see. But I think what we're saying is, in honor of Seinfeld, the chemical stocks are sponge worthy. So if there's a rotation into anything, those are sectors that could really kind of balloon. So anyway, go ahead with the.
That was a pull, Danny.
Thank you very much. Maybe, by the way, Vinny, title of our next Substack is this
sponge-worthy.
Sponge-worthy.
Is this sponge-worthy?
So good. Thank you. All right.
Carter, go ahead. Okay.
Target, Nike, Lulu.
Yeah.
Okay.
And by the way, if this Jefferson bourbon goes public, I'm going to buy every share that it can. So reach out.
By the way, can I promote my brand here?
Yeah. What do you got there?
My niece.
Let me see. I can't see stuff.
My niece Sarah.
Is that a QR code on the bourbon? What is that?
She lives in Nashville. It's called Heaven's Door.
Okay.
And yeah, as you're thinking, this is Bob Dylan Distillery down in Nashville.
Oh, there you go, Vin.
Pretty cool.
I love bourbon because they all have a story.
Pretty cool.
That is pretty cool. All right, Carter.
Oh, look at that, Carter.
Don't say anything,
oh,
Porter.
Now they start. Okay.
Our Substack
Um,
subscribers knew I was long on the quarter.
What you got?
$5.
So wait,
So
let me guess. So bad it's good, Carter?
Well, no, bearish to bullish, right? Early stage bearish to bullish reversal buy.
Big suck it,
So-
Danny.
I think you get paid off at one. I was going to say
Jesus,
130,
that looks
120 anyway.
Do they sell chemicals?
I know, right? I mean, but that's how it. You need it to bottom. You think about that, and people say, "But I don't want to wait. I want to say today's the day. It's cheap here. It's cheap." There's no technique known, and that's just not a reasonable. Again, just to show you here, watch over here. TGT equity ANR. Okay, now
Are we actually going to compare them?
watch this. Look at this. There's no one has a clue. How can Michael thinks it's worth 130, and Greg thinks it's worth 95? How in the hell is that possible?
Bad
There's
banker,
no-
good banker.
There's nothing there.
Mm.
I mean,
Beauty's in the eyes of the banking fees, Carter.
right. That's right.
Well,
But I mean,
well,
but I mean,
well
the point is-
compensated, uncompensated. Continue.
Right.
right. The point is, sorry, the screen changed there. But the point is that the premise on Wall Street is very important because when you start, I mean, I remember when I started, I said, wow, this analyst has upgraded this stock. Therefore, the stock goes up. It's the exact opposite. Stock goes up, and then they change their price target. It is what it is. There's no take.
Can you hit can you hit Nike here just and Lulu specifically just because
Yep, here we go. Nike, NK.
so target's a bearish to bullish. We got
bearish
that, right?
to buy. Nike, I would not do that. I would stay away, avoid it. What was the other one?
Lululemon.
Lulu.
LU.
Ooh.
There you go. That's just how they start. And again, what's it worth? 200, 500, 200. It's not a matter about that. Forget what it's worth. Can we make money off it? I think you can. So what do we have? The first thing is important. The heavy volume up thrust pulls back for 2 days, volume dries up. Heavy volume up thrust. Some retailers have gone through the loop. Look at VSCO, look
Yeah.
at this. I mean, some of this stuff has gone really.
What would you do with VSCO? And
Yeah, I would sell it.
What about Vinny's favorite, AEO? You got to probably trim that one too.
Yeah, just too much. And
Sydney Kelsey. Wow.
yep. I
Vinny
mean,
loves the Travis Kelsey jeans.
Travis just retired. I would
Yeah,
retire.
but Sydney's
Look,
still there. But yeah.
and there's nothing
Yeah.
here. I mean, let's have some fun here.
That's
What you
nuts,
say,
by the way.
what is it? That's not. What is it worth? What does it do? They have blue jeans. Oh my God, they have blue jeans. This is incredible. They have sweaters and t-shirts. No,
This is
these
a
guys.
crazy chart, by the way.
There's nothing there. They have to. So you buy it or sell it when you can. But what's important is just to try to be on the right side of trend. If it's transitioning and turning over bullish to bearish reversal, sell the damn thing. If it's a bearish to bullish reversal, buy the damn thing. Stick with trends. Not infallible, but it's the best technique we've got. Right.
What about Starbucks coffee?
Gosh, that's not working for some reason. SBUX, as you'll know.
Why? $14 coffee is not popular.
All right. Well, maybe a small nibble. It's trying to base and bottom and stabilize here. I would say respectively benefit of the doubt for a little bit.
Okay.
Yeah.
All right,
let's not
guys,
go
do we
there.
go to the speed round here? Because it's some
We go
names
speed
here
round.
All right, so I'm gonna knock some off here. I'll do 5 and you guys pick ones. Okay, so let's do Carvana, CVNA.
CVNA.
CVNA Q-5. Just CVNA for now.
Beautiful. Stay long, be long.
Stay long. Be
What?
long.
Large long.
Large long.
Wow. Okay, that's good. Adobe, ADBE, which I know I don't think you hit yet.
No, that's not good. I mean,
Trying to
Pick
base
that,
bottom,
Porter.
Fuck.
I mean, could it be turning? Sure, everything could be happening, but right now we just stay away. Don't do it.
Okay. All right, give me
If you
3
look at
more
the-
and then
Like,
Porter,
wait for it to
Vinny.
turn. Like, why not buy it here? We want the turn. Wait. What else?
Lockheed Martin.
LMT. Here we go.
Yeah.
Well, how nice is that? And
Oh.
very bullish price action today. No reason that can't print 550, 570, 580.
Flying chemicals around. All right, 2 more for me and then they'll turn over. Uber.
Yeah.
Uber.
Good call, Danny.
It
Thanks,
was
man.
trying to break out, then backed away. Pair of twos.
And then Progressive, PGR.
Oh, bad day today.
Yeah.
PGR dropped and gapped. I would not do that. There are others that are better if you want to insure. Travelers looks pretty good, right? Hig looks pretty good.
Wow.
PGR, not so good.
All right, you guys take over on a few there. You see the
I guess
list
the
there.
only couple we'd point out, maybe PCT. I don't think it looks great.
Don't say that. It's so annoying. You
know.
can't do
No,
that.
it doesn't. It
Doesn't look
doesn't.
great. I'm just being honest. SOC.
SOC.
Wait, he didn't even comment on. Hold on. Whoa, he didn't even comment on.
Yeah, no, it's not great. I mean, I'll say
PCT doesn't look
You
great.
didn't let him speak because
know
you
it.
didn't want him to tell you how bad it looks.
Pair
No,
twos.
it looks bad. It could bounce to 12, but it
It's
doesn't
not
look
a
great.
short, having dropped from 17 to 8. It's pretty aggressive to short. Seems to be basing a little bit, basing and stabilizing, but it's not a long wide. I'm sure it could pop to 10 or 11, but it's a pair of twos. Just saying the middle of 10 score, tough to play here.
United Healthcare.
Oh wait, hold on. He didn't do SO United H.
That's a bit bearish to bullish reversal buy.
It looks
Right.
good.
So
Really?
Yeah.
Usage and the key here is the dropping and gapping, right? Really catastrophic drop and gap, drop and gap, drop and gap, drop and gap. And then it has this, and I'll take away the volume on that day here. It drops and gaps, but close on the high and then revisits it. While it undercut it briefly, it kind of qualifies as a double bottom. And then since then, the really aggressive up thrust. I would
short
say,
report today, and it was still closed higher. Yeah.
there you go. I'd say you paid off at 450. After that, let someone else have it.
SOC.
So see, yeah, just would leave that alone. Yeah,
Something
okay,
happened here.
Could you speculate and say, look, yeah, something really well. No, could you speculate and say, look, it's changed, right? Short-term chart, it down heavy, down on heavy, down on
That
heavy,
was
and now
perfect
up on
about
heavy,
a
down,
short-
up on heavy. Could you play this to 15? Sure, but that's real short-term stuff. Yeah.
Can you look at Blackstone BX and then Carlisle CG? I'm curious on those.
Pair of twos for that.
That's Blackstone pair of
PG is
twos.
a bit better. KKR. Look at the tension in KKR. This is what you could see with the eye, right? Lower
Yeah.
high, lower high, lower high.
So is that a pair of twos or is that?
Right, it's those converging trend lines. You could draw them, and so you reach the apex of the formation, or just said in normal language, the standoff is complete. Bears and bulls are matched off evenly. For every dollar that comes in the market trying to commit capital alongside, there's someone selling a share. No one's in the ascendancy. We're looking for a resolution of that standoff.
Right.
Presumptively, based on the way Carlisle's acting, the way some of the others, that KKR is resolved up.
How about Jeffries, which is going to be reporting here? JEF.
You know, it's such a mixed bag in the brokers. I guess I'd be long, but what a difference between that, you know,
Yeah.
and that.
Yeah.
I mean,
Agree.
they're small. You know, some of the smaller ones of, you know,
So for those, he's bringing up Goldman Sachs.
RJR. That looks like it's going to break out. RJR.
What, Piper Sandler?
Piper. RJF. You know, they're all. But these are the leading. This and the question is, are these just too good?
While we're on that, by the way, because the regional bank team, can you just give a little KRE?
Or
Yeah.
let's do Pinnacle. PNFP is
Well,
probably.
let's do both.
Okay.
PNF.
FP.
Well, so I'm going to go back and forth. PNFP, KRE. There's a clear difference. This bank, something's wrong.
Something's wrong with Pinnacle?
Well, it's trying to turn though a little bit. It's trying to.
Yeah, but this drop and gap is
Doesn't
really
know.
that drop and gap and the
Now,
heavy
yeah.
volume down.
It doesn't
So
know it's
here's
trying
a way
to
to look
turn.
at this. Watch this. I'm
It's
going to do
fair.
this here. This will be good. Ready? We'll do a G10. So there's a 2-panel chart to juxtapose this a different way. So on the top, I'm going to do a standard 3-year chart instead of 2. Now watch this. I'm going to put PNFP on the top, and I'm going to put KRE on the bottom. So now we're looking at, so this is the relative performance, right, to the KRE.
Yep.
Right? And so this is just horrible. For instance, the stock has held those lows, but where is it relative to those lows on a relative basis? I mean,
Yeah.
Fair.
You would rather own KRE than.
I would rather own KRE than that.
Okay.
All right, a few more things.
Can we go one round? Dr. Horton, give me some builders.
Yeah, little builders, little DHI.
Yeah,
action.
DHI. I would stay away. LEN. I would stay away.
That was terrible, Lennar.
PHM.
Terrible.
Now, some of them, this.
That's Pulte, just so people that aren't. Yeah.
Look at this thing. a little bit better, you know.
Yeah.
incremental.
How about QXO?
QXO? Here we go. Whoa. All right. I'm going to change
Whoa.
the
Yeah,
down
yeah,
here.
go
That's
low.
not it. Yeah.
All right. Well, that's fun. All right. Now that's speculative, and I would do that. I would say play for 30.
Can we, Vinny, we didn't hit uranium yet. Can you do SRUUF and then SII?
And
UF,
some of the other names, CCJ, and
like that a lot.
What is that? How does that look?
he
I
said a
like
lot.
that.
He said a
I
lot.
like that. Yeah.
What'd you
Okay,
say?
a lot, 24.
A lot.
24 bucks. A lot.
A lot.
Bearish-to-Bullish reversal. Good entry point.
God,
24.
that's good looking. God.
Yes.
All right. SII.
SII.
Shout out to Cy Jacobs, who literally
Yes.
was pounding the table at $30.
Yep.
So
Okay, so now what to do? You know, how to
Jesus.
cope with great winners,
Gorgeous.
right?
What?
I would reduce substantially.
Yeah, it's
That's
stretch.
vertical.
Stretch,
That's
but
Top
not
Gun.
bad.
That
I
is
mean,
unbelievable.
it's unbelievable.
Cy,
I mean,
congrats. Yeah.
While we're doing with Cy Jacobs, what QNST? That's one of Cy's favorites.
QNST. Well, on the other hand, that's one of the twos. Can it turn? Can it start to do? Sure, but I'd rather pay 17. You know, I want someone else to go first, so to speak.
Someone else deeper in the water. All right, guys. I got one more in honor of bourbon that I don't think is on the radar screen for anybody, which is Diageo, which is DEO, which those companies are left for dead. And I've done no work on the name. I'm just curious and thinking about it as we're.
Beverage names have been really.
By the way, that was a Ronan Patrick Hurley special. He loves the Diageo.
I'm right. So bad it's good. Where is it, Carter? Let me see that
it's
chart.
Established downtrend, brown. You know
Oh,
I
Horrible.
mean, it's just unrelenting. And you know, one can say, but isn't it cheap? There's nothing.
it's in AA. That thing's gone. What?
That's
Yeah,
AA.
I mean-
That's past AA.
Yeah, I mean, it's now. Is this, you know, you hear these things that people
Oh
don't
my
believe in,
God.
which
I had
can't
no
believe.
idea, by the way, just for everyone listening. I didn't even have a look at the chart. I looked at the
That's
company.
yeah, that's bad.
Look at here. Look at Brown Foreman. Look at this same exact
Oh
chart.
my. We
They-
buy
Brown-
property in
The
Kentucky.
whiskey's got a problem.
Yeah, whiskey's probably
think?
They suspended their what was it, Jack Daniel's production or something?
Yeah, I did.
Or no, it was they're the
No,
biggest
Jim
whiskey.
Beam.
Jim Beam, the largest selling whiskey, right?
Yeah.
Bourbon.
They
Well,
have too
maybe the
much.
tariff resolution. Maybe that's one of the sectors if the tariffs get outlawed. That
So
They're
let's talk about how they turn, right? Because it's important. Look at Estee Lauder. Estee Lauder was doing the same thing.
Oh, it was.
But guess what? Just wait for the damn turn. And that's the hard part, because once it's turned, I'm not talking to you guys, you know this, but whoever might be listening, they're like, yeah, but I can't buy it now. It's gone from 50 to 85. That's why it's so hard, because you're like, I missed it. You didn't miss anything.
No, the
Buying it on the way
Diageo.
down is terrible technique. It's just never.
I mean, Diageo has a new CEO that took over on New Year's Day. You know, can it turn around? It's just.
wait, hold on. You got Ronan, our favorite jockey from Ireland, with the best U2 song of all time,
Yeah.
promoting a liquor brand on New Year's Day. I mean, that is if that doesn't line up, the stars don't line up, then that's
New
I mean,
CEO, you know. So I'll take a look at this thing. I haven't looked at it in years.
Yeah.
So.
But
all right,
just
guys. Anything else? It's been an hour. I want to get Carter out of here.
Yep.
I'm on the. If we go any longer, I'm under the table and dreaming Dave Matthews style.
Well, you mentioned yields here. We didn't do 10-year. I have maybe.
Oh yeah, 10-year yields because Vinny. No, we
So-
did do 10-year. It was a pair of twos.
Pair of
Yeah,
two.
different long-term.
2 year
charts
looks better.
on.
Oh,
So,
okay.
yeah, it's just a pair of twos. The question is, I think I'm in the lower yields camp. I mean, I think
You're in the lower 10-year yield
If
camp.
you had to bet directional, it's a pair of twos going nowhere. But if I had to play, I'm in lower yields camp.
You're in QE camp. All right.
Yeah.
Well, Carter, give me. How can people find you? Because we have our Substack community. Worth
Yeah, just
charting.
Go to
Worth-
worthcharting.com. All sorts of good stuff.
And when are you going to start a Substack?
He's got a
You
service.
know,
He's got his.
got his
No,
service.
but get on Substack. Let's get you involved. You have no idea how great it is. And I will say, Porter and Vinny, as I said in the opening intro, have been much more involved. Like they get in the weeds with everybody. And I think it'd be extremely value added to have you in there putting charts up every day. That's just me. Just saying it.
Carter has his own. Worth chart. He doesn't pay the
Worth
VIG
charting, all that,
Substack.
and more. But
He doesn't have to pay the VIG, as they say. All right. Well, Carter, listen.
you
Thanks
guys
for
are great.
coming on for
Yeah.
another Bourbon and Charts. Porter, Vinny,
All right.
as always, thank you. And
Talk
Boys,
Happy New Year. That's the last
This
time
was
we
awesome.
can say it. And that's it. All right,
Bye.
guys. Love you. All right. So I have some exciting news. I am teaming up with Scripps News to launch a new television show later this month called The Danny Moses Show. The show will be another way that I can express my views, sit down with special guests, and provide market insights while reaching millions of people in the streaming world, on local stations across the country, and everywhere in between. And with the advent of prediction markets and using them as both a news source and a tool for trading as a way to express conviction, the show will be sponsored by Kalshi. And each week I will feature a few event contracts to keep an eye on across business, sports, and pop culture worlds. But don't worry, On the Tape isn't going anywhere. Expect me to still rip off the tape, provide market commentary, and the occasional longer form interviews with guests. And spoiler alert, my guests on the premiere episode of the Danny Moses Show will be, wait for it, Vinnie and Porter. Much more to come on how and where to watch, but I wanted to share this news with you, so stay tuned. And while we're on the topic of predictions, I finished the regular season in the NFL just over 500, but we are on to the season that counts, which is the playoff season. And I'm looking at Super Bowl matchups, and in the prediction markets, I see the Los Angeles Rams versus the Buffalo Bills pricing at about 6 cents, or after commission just around 15-1. If the Rams get through Carolina, which I think they will, and the Bills beat Jacksonville, of which they're favored in that game, that market should more than double and could be even higher depending on the other game's outcomes. That's the beauty of these event contracts, is the ability to trade 24/7 at fair market value. So good luck on wildcard weekend, and stay tuned for more of my predictions. Thanks for listening to the On the Tape podcast with Danny Moses. If you like what you heard, please subscribe on either Apple or Spotify to the weekly podcast, and please leave a rating and review, positive only. You can also watch on the On the Tape channel on YouTube and give us a thumbs up there as well.